Hi everyone. Today is Thursday, February the 20th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we are looking at the E-mini S&P 500, as we do often for our first chart. Here's what we notice. We're currently inside of the range of yesterday's trading pattern, and also largely inside the pattern of the day before, and the day before that, and the day before that. So essentially, we are in a box, and that box is somewhere between 6150 and 6120, maybe, right? Somewhere inside of this range. 6130 at 6135 actually is the volume point of control. 6130, we've got a significant gamma line there, a lot of interesting things going on. So really we're caught in a 20-point range in the ES. Now, a move is coming. I don't know the direction. My Keltner bands are sideways, my volatility bands are sideways, but what we do see is every time we make a deep dip, we will bounce. So we are still in a buy the dip formation. When will that break down? My thought is if we lose 6112, well below this current area that we're in, we might have a shift change in terms of rotation. Everything does still say buy the dip, but there's a fair bit of resistance to the north. My supposition remains that sellers are driving prices to the north because they take the shorts at 650 or 6150 and then have to buy to cover to get out, and as soon as they are finished buying to cover, they turn around and try to short it again. Since yesterday and the day before, we are building higher lows, and so this confirms some element of potential upside information in a relative continuation pattern. Right? So where will that go? I don't know. You know, maybe it holds. Maybe it holds this line right here at day before yesterday's closing VWAP, and that number is 6139. Where's the go, no-go intraday? My thought is it's the 6130. A lot of congestion here. Buyers are trying to dip it, and so what you want to do is watch for a wick. Remember, price always looks the same when it's turning around. It fails to close lower. It tests resistance, which it did with this candlestick formation here at the 10 o'clock hour, and then pulls back and holds a higher low. We're looking for the same thing, very likely around the same place. We are under the VWAP and under the moving averages. That tells me that our bounces higher are likely to be met with selling pressure, and so a good sell zone might be around 6157 with a tight stop no more than 3 points, just like yesterday or the day before. All right, let's head to the NQ. A lot of us trade the NQ. It's got a lot of action. You can make a lot of money in small spaces. But what do we see here? We actually are in an inside formation for several days. Have a look at this. I think today might be our third inside day. Look at these dojis that are building in general, right? Here's a big one, wick up. Sellers at 22,300, also a gamma line there, right? Buyers at 22,150 or so, although they break that wick and then recover. I would say move that number down to 22,140. That's going to be the go, no-go line for buyers today. What is the slope of momentum and trend? Well, they're mixed. We have an upward momentum drift in a downward formation. And notice our wedge breaks. We break the line and then return to it. What does this tell us? It tells us that there are sellers above us, 22,300, line in the sand for where the ranges might be. You could take a short at this area at around 22,295. You only want your stop to be about 15 points wide. Doesn't need to be any more than that. As far as the downside goes, pressure event is starting to look a little bit different, right? Still higher lows, but we've had to move that compression down a little bit, even though we're coming into the higher lows. So what do we get? Another sideways formation that drives us crazy? Potentially. If momentum is up and trend is down, we are going to have candlesticks that retrace each other because there's a cross current. They're not moving in the same direction, as opposed to something like this, where we clearly see dips or buys, even though we retrace. There's a lot more volatility building in here. So yes, the go, no-go line, 22,140-ish. That might be a good support zone for you. You could come in to 22,150 and watch it stabilize there. In essence, buyers have been there 3 days in a row, including the pre-market action. Breakaway formations might be above 22,200. That's a gamma line. So the pullbacks are giving us bounce zones in this particular area, but resistance at the gamma line of 22,200 has been largely obeyed. So what do you want to do? Here's the wick of the last time it breached 22,200. It went to 22,220-ish and then broke down again. So we break out of that area. We could push into the gamma lines above at 22,240, 22,250, somewhere around there. All right, that's what we're looking for. If it breaks these ranges in either direction, remember the movement could be very swift, so don't hang on if you're sitting in the wrong direction. You can pull out, look for a 5-minute formation that tells you directionally what you're doing. Remember, low, a look below, and fails, and then a pullback to a higher low. That's the same thing as tests a low, fails to hold lower, tests resistance, and then pulls back and gives you a higher low. So what do you want to look for? You want to look for this area. It's sort of like an inverted head and shoulders pattern. Same thing. That's what happens when price action is potentially turning around, but realize we're in a range, so waiting for these areas near 22,180, 22,170 looks like a pretty good show of it. All right. YM. Well, what can we say about the YM, right? We can clearly see it's caught in a range. Traders are waiting for something. I do not know what, folks. I don't. They're waiting for some kind of penny to drop. We could go sideways for weeks before something happens. And even if we dip hard, buyers are going to come in. Where's the number to watch? It's still 44,400. It's still that line in the sand. If we get to 44,400 and we break it, as we immediately recover, it's a buy zone. Where is resistance? 44,751 in the YM. That's essentially what we're looking at. If we lose the edge, we could see a fade, and that fade will bring buyers. Where's the next line in the sand? 44,000, something like that. Just let the chart do its thing and realize patterns are available every day. The one thing you don't want to do is buy a breakout or sell a breakdown, because the price action is not telling you that. The price action is saying, hang on, folks, we are building a congested pattern. That congested pattern is going to break out. Remember, the market moves from congestion and consolidation to expansion. And that expansion could be an inventory correction to the downside. It could be a breakout to the north. Whatever it is, that's what we're building here. And so be patient. Let price action come to you. So what are we looking at intraday? Go, no-go line, 44,400. When it comes in there, start hawking it. Does it look below and fail? Listen, if it looks below and comes into this area and then fails by raising, as soon as you get up over heavy congestion, that 44,450, Bob's your uncle. You buy it, you get to the value area high, and you take your profits. Remember, the reason I go over these things talking about the futures, is because you can do it in every market, in every time frame, and make a trade. Why? Because humans build algos, and we are creatures of habit. It's easy, right? It's easy to be in a habit. And so this is why the patterns work every day. Long-term traders, we're simpletons. We look for support, we buy it. We look for resistance, we sell it. If we're right, we stay in. If we're wrong, we get out. There's nothing else going on. If you just focus your mind on those simple things, you're going to be better for it, okay? Nothing wrong with being Simple Simon. There I am with the simple, wow, me and my nursery rhymes of old. Okay, so what are we looking at for Bitcoin? Well, Bitcoin's put on quite a bit of a run, right? I mean, quite a bit of a run. Where are we coming into? Frontline resistance. So, what potentially is going to happen here? We're either going to break out or we're going to break down. Oh, thanks, Captain Obvious. What's the real deal? It's the execution event. What's happening here? Is trend up? Yes. Is momentum up? Yes. Are we coming into resistance? Yes. So the two of them say, hey, we're coming into resistance against the formations that say, wait a second, we could break out, right? Trend up, momentum up. So what do? We watch for it to head there, and then we see if it's a look above and fail. Now, this look above and fail is actually coming into resistance, pulling back, making a new low, and allowing us to take the breakout. And at that point, price action reverses right around 99,300, and it fails to hold higher, falls all the way down into liquidity, and then bounces and gives us a lower high, right? So that's what we want to watch here. Do we break out, take the trade? Yes, collapse into a 5-minute chart, see if it holds, moves forward. If it fails quickly, you've got yourself shorting action back down into the deeper moving average. What's the go, no-go line? Well, trend is pretty significant here. So the go, no-go line is actually the value area high at 97,400. That's going to be the line. As long as it stays above there, you're okay buying the dip. If it loses that price action, it could fall another $2,000 into the point of control and the VWAP, which are both sitting congested at 96,000. So be careful there as you chase breakout action. It might not be what you want to see. All right, here's our good buddy oil. Now, look what oil did. Came into 73 on the nose, came back, did not clip our 71.50 as support from yesterday. And this is, of course, the WTI oil contract. It's not Brent. And now, what are we seeing? We're moving up. What is trend? Well, it's sideways overall. But right here, we're above the VWAP and we're above the moving averages, and those moving averages are slightly upward. We can also see wicks that give us higher lows. This upward formation tells us in momentum, it tells us that we are looking at resistance to test above. So what does that look like? Looks like 73 again. Now, where might we know that we've got a problem moving upward? If we get into 72.60 and we cannot move above this line and stay there, it's time to take some profit. But our Keltner band is moving up from above and also moving up from below. That's solid formation that says pullbacks, particularly into the 72 area, are going to give us buy zones at the first pass. All right, could we be heading back to 74? Potentially, right? Seeing a lot of motion. What's my thought? My thought is we shake the trees a little, come all the way back into 71.56, 71.46, and then bounce again. That's my thought there. You know, what I'm looking for is formation that shows that I have upside, a continuation upside that keeps me long, and then failing to break higher, and then completely breaking support, bouncing into a lower high, and that tells me I've got a short. That takes time, folks. You got to let the chart tell you when to move instead of rushing into the trade. right. Gold went on quite the bender. Just savage run up from yesterday, 29.34, right? We have that line as the VWAP right now. The point of control is 29.44. Last night, broke new highs, 29.73. Look at how long it stayed here. Now, I want to talk to you about this kind of formation. Here we are at 29.73. High, 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 high. We can't break higher. We can't break higher. All of a sudden, we can't break higher, but we still are making higher lows, right? But all of a sudden, that pattern begins to break. Now, here's the magnificent thing. This works on a 5-minute. It works on a 1-minute. Works on a daily. Works anywhere you look at it. When you see buyers fail to be able to breach a line in the sand, and you've got distance between your VWAP and your moving averages, you know there's going to be a liquidation break. 8 times out of 10. So what do? Trim your gains and raise your stop. Guess what? If you're wrong and price expands, as long as you don't raise your stop over an old area of support, needs to be below that, the price action can come in, give you a little wiggle, you'll take some profit, and the last part of your trade will go beautifully. If not, you hold your gains and you look for the next trade. Where is that? Somewhere near these lower moving averages, right? Someone said, hey, how do we set those trades up? Let me show you what the list is. If you have TrendSpider, and I can't hardly see him, this one is a 30 EMA, right? The pale green one. Or maybe that's a bright green. Who knows? All right, I've got my Keltner bands. You know those are these. I've got, I don't do those. We don't do those. Splits, we don't want to see those. We don't want to see those. And a volume point of control. I have the moving average of the volume. And then I have my standard deviation bands, right? And then I have an EMA 14. That's really all I have, right? VWAP sitting there. Okay, so what does this price action have to do to say I'm going to move forward? Well, it's got to close over the VWAP. And ultimately, it's got to get back above 29.70. What's momentum doing? It's rolling over. It tells me usually I'm going to come into a moving average, and I'm going to hold it. Well, guess what? I did just come into a moving average. I could easily hold it. If you say to yourself, hey, I want to take a trade long right now, the question might be, who's in your way? Well, I spent 6 hours carving out a line here, and I could not move above it. So I'm guessing there's sellers there. So if you're looking for a buy zone, sure, you can take it at 29.60. Your stop, no more than 4 points wide. And that's a pretty big point spread for gold. You might want to try micro gold if you're trying to take that bounce. The opening tick is 29.50. I'd like to wait for it to come down and test that ledge. It went 4 points below. I like waiting for 29.49 to see how it holds there to go long. Sorry I went so long there, but I did want to explain that formation. You can see it working a lot. Okay, SPY. This one obviously is in breakout, right? Higher lows and higher highs. Looks a little different, right? So what do you expect? Well, I expect it to hold 610. I do. I expect it to hold 610. We have a liquidity area at around 610, 610.50. The one fly in the ointment is that I'm now battling with the VWAP, and I have downward momentum, and my moving averages are flattening. When my moving averages flatten, it tells me to wait until I get some sort of rotation that says, 1, I've stopped heading lower, 2, I've bounced into resistance, and 3, I've pulled back into a higher low. Now, can you see that sometimes on an hourly chart? Sometimes it just comes in, fails to head lower, bounces into resistance, pulls back one time at the end of that candle, and then off they go to the races, right? Notice it does come back afterwards and retests that line of support. That's 610.76. To me, the no-go line, it's all the way down here at 610. You could try it at 60, at 610.76, but it's dicey. Let's look at the Qs. A little bit more sideways than the SPY, but still, for the last two spikes, higher highs and higher lows. What is the thought? Well, the thought is that dips or buys. Where's that number? 536? If we're trending higher, we're probably going to hold 537, right? But that would be the line in the sand for me. If I lose 537, I'm going to step out of the way and wait for the pullbacks that firm up and tell me I'm going long. All right? Market looks a little bit wonky today, so I would be pretty careful. All right? Really be careful. Okay, that's it for me, folks. Probably going to be a little quiet here through the day. A lot going on. So take care, and I'll see you soon.